Since 1978, when China decided to open up and reform its economy, the country's GDP has averaged an incredible growth rate of over 9% per year. This transformation has lifted nearly 800 million people out of poverty and brought significant improvements in health, education, and various services. However, recent times, especially post-pandemic, have seen a slowdown in this growth. So what's going on? According to the World Bank, domestic demand in China has been sluggish, leading to low inflation. The room for economic stimulus is limited, and weak business confidence, partly due to the property market downturn, continues to impact growth. In the medium term, China's economy is expected to experience a structural slowdown. For decades, China's growth has been driven by investment and export-oriented manufacturing. However, this approach has hit its limits, causing economic, social, and environmental imbalances. To reduce these imbalances, China needs to transition from manufacturing to high-value services, from investment to consumption, and from high to low carbon intensity. But how is China planning to achieve this massive transformation? Let's break it down. But before we dive deeper, please consider subscribing to our channel to show your support. Now let's talk about how China is going to transform its economy. Rapid urbanization. China has set an ambitious goal to have 70% of its population living in urban areas within the next 5 years. As of 2022, about 65% of the Chinese population resides in cities. With an aging population, China views urbanization as a crucial solution to expanding domestic demand and promoting industrial upgrades. This urbanization drive encourages farmers to move to cities, offering them the same entitlements as city dwellers, something that many migrant workers have lacked due to the hukou system. Introduced in 1958, the hukou system serves as a means of population registration. It controls internal migration, manages social protection, and preserves social stability. The idea was to keep a large portion of the population in rural areas to support agricultural output. Additionally, strict migration controls into larger cities were intended to prevent the development of slums and poor health conditions, a problem faced by nearby countries like Bangladesh and Pakistan. However, times have changed. With the reform of the hukou system and China's plan to move more people from rural areas into cities, the workforce participation rate is expected to improve, particularly as the population ages. Moreover, urbanization can help absorb the excess supply in the real estate market, a persistent drag on the economy. Urbanization is not just about moving people from the countryside to the city, it's about creating vibrant, livable urban spaces where people can thrive. This means better infrastructure, more job opportunities, and enhanced social services. Imagine bustling city centers with efficient public transport, green spaces, and cultural hubs. That's the vision China is aiming for, and it's a vision that could transform the lives of millions. Transformation in manufacturing. In today's rapidly globalizing and technologically advancing world, China faces both opportunities and challenges. To tackle increasing international competition and ensure economic security, the Chinese government introduced the Made in China 2025 inches plan in 2015. This plan aims to transition China from a major manufacturing country to a powerful manufacturing nation through autonomous innovation and transformational upgrading of its manufacturing sector. Gone are the days when China could rely solely on low-end manufacturing like clothes, toys, and furniture. The focus is now shifting to higher-end products such as vehicles and green technology. Just as the US outsourced lower-end manufacturing to China in the 1980s to focus on design and sales, China is now outsourcing some of its manufacturing to countries like Vietnam and India, while concentrating on advanced manufacturing sectors such as the electric vehicle industry. Take Tesla, for example. Tesla's Shanghai Gigafactory, which started operations in 2019, broke its own annual production record by producing over 1 million cars within 3 years. In 2022, despite the pandemic and supply chain challenges, the Shanghai Gigafactory contributed to over 50% of Tesla's global sales and around 25% of Shanghai's total auto production. With the localization of core components, over 95% of Tesla's supply chain needs can now be met domestically. And get this, the whole assembly line can roll off an iconic model in just 45 seconds. But that's not all. In 2021, China installed almost as many robots in its factories as the rest of the world combined. This move to automate and consolidate its position in global manufacturing despite supply chain disruptions shows China's commitment to safeguarding its economy against stagnation. The Made in China 2025 inches plan is not just a policy. It's a vision for the future. It's about making China a leader in technology and innovation, creating products that are not just made in China, but designed and engineered in China. This transformation is crucial for the country to move up the value chain and compete globally in high-tech industries. Focusing on high-tech manufacturing and services. China's push towards high-tech manufacturing is evident in its efforts to lead in industries such as electric vehicles, robotics, and green technology. The country is investing heavily in research and development to ensure that it remains at the forefront of technological innovation. By shifting from low-end manufacturing to high-value services, China aims to create a more balanced and sustainable economic model. For instance, the Chinese government is supporting the development of the semiconductor industry to reduce dependence on foreign technology. This strategic move is crucial for China's long-term economic security, especially in light of the ongoing US-China trade tensions. Additionally, China is making significant strides in the renewable energy sector with massive investments in solar, wind, and hydropower projects. This focus on high-tech industries is about more than just economic growth. It's about creating jobs, fostering innovation, and ensuring that China remains competitive on the global stage. It's about developing industries that can drive future growth and create a more resilient economy. Domestic consumption as a growth driver. Another key aspect of China's economic transformation is its focus on boosting domestic consumption. The Chinese government recognizes that relying too heavily on exports and investment-driven growth is not sustainable in the long run. To address this, policies are being implemented to increase household incomes and improve social welfare, encouraging people to spend more. China is also working to expand its middle class, which is expected to drive consumption growth. By increasing access to education, healthcare, and social security, the government aims to create a more robust domestic market. This shift towards consumption-driven growth will help reduce China's economic imbalances and promote a more stable and sustainable growth model. Domestic consumption is all about empowering the people. It's about giving them the means to live better lives, to buy more, and to contribute to the economy. It's a shift that can create a more vibrant and dynamic economic landscape, with businesses catering to a growing and increasingly affluent consumer base. China's economic growth has been nothing short of remarkable, but the country is now facing new challenges that require a strategic transformation. Do you think China will be able to transform its economy and move past stagnation? Share your thoughts and leave your comments below. If you like what you watched, hit the like button and subscribe to our channel to show your support.